strong dollar, low oil prices and plenty of cheap money from the central banks all around the world. There are several very extreme influences that are pulling and tugging at the world economy right at the moment. What are the consequences for the world economy? Heiko Peters is here with me to analyze that question. You and your team analyze the world economy on a very regular basis. You come up with a DBIX once a month exclusively for Deutsche Welle. What is the DBIX telling us about the business mood in the four biggest world economies right now?
The DBIX remained unchanged in March after it declined in the previous month. And so on a whole, at the moment, you see that you have still a relatively sluggish development of the world economy. Especially in the first quarter, it should be relatively weak. But going forward, we still think that we have a moderate acceleration in the further year.
There are currently both pessimistic as well as optimistic predictions for the further development of the world economy. The IMF, for example, states in its newest World Economic Outlook that, quote, potential output growth has declined since the global financial crisis. Where is that general growth worries, where are they coming from?
I mean, we had relatively weak global growth since 2012, and there are some structural factors that are explaining this weak development. One reason for this is this weak and sluggish recovery of global trade. We think it's structurally weaker than in the past. And the other factor is that you have a slowdown of the Chinese economy. And Chinese economy was one of the major growth drivers in the past. And so it's not there anymore that you can see that positive effect from the Chinese economy. And this is also then one explanation for the relatively weak investment cycle that we saw.
Mm-hmm. The OECD, for instance, is also not looking very optimistically into the future. It gives warnings of risk for the global financial stability caused by, another quote, abnormal low inflation and interest rates. How much of a factor is that?
Well, there's a risk going forward that if you see a pickup of global growth and the monetary policy is lagging behind with a reaction on the brightening of the global economy, that the low interest rate environment and the quantitative easing is therefore too long. And if it's too long, then you have the risk that you see an increase in asset prices. You see a further increase of stock prices, increase in the housing markets, and then there's a risk that in the coming years, in the medium term, that we see a next building up of a bubble.
Mm-hmm. The central banks, especially the ECB, keep flooding the markets. The ECB just started a few weeks ago with its biggest bond buying purchasing program in its history. The finance minister, the German finance minister, Wolfgang Schäuble, is one of the people who are very skeptical about that course of action. He, in fact, says that the cheap money policy of the central bank has been the main reason for the economic crises around the world in the past years. Is that a statement that you would underline?
You have to differentiate between the actual policy of the ECB and monetary policy, for example, by the Fed before the property price bubble in the US. Currently, the ECB is doing its quantitative easing because of the still relatively sluggish, moderate recovery in the Eurozone. You saw some better numbers recently, but given the weak development in recent years, it's still only moderate recovery. If you, for example, exclude the German economy, the rest of the Eurozone is still relatively weak, especially the peripheral countries. And so for the ECB, it's reasonable in this environment to perform more all the low interest rate environment and also the unconventional measures at the moment.
Thank you, Mr. Peters. So low interest rates and the billion or trillion dollar bond purchasing programs, the course of the central banks around the world has benefited also, among others, the equity markets around the globe. There are actually economists who are speaking about a bubble that may in fact burst anytime soon. So that is reason enough for us to look at that topic in our focus interview this month. the boom at the stock markets and what are the consequences. You can see that at dwde/English/Made in Germany.